Good evening, I'm back. I am your host, Jack Remington of Jack Remington Political Analyst. Today is the second video of our financial series and our little adventure in our company called Occidental Petroleum. The stock market ticker is OXY on the New York Stock Exchange. Let's get right to it. It's a three-part video. We're going to break it down in three sections. Number one, I'm going to tell you how you can get your information, and we'll have some screenshot examples and some Camtasia screenshot video footage. The second part is going to be what we actually did with the stock options, our successful trade for the first time in almost 15 years. And it paid off because I had a plan and it worked out successfully. The third section, the final section, is going to be what our current and our near-term and long-term strategy is going to be with our position. There's three things that can happen. I want to say this right now. There's three things that can happen when you underwrite covered calls. And the first two are really good, and the third one is still good, but you got to do some dancing, and you don't want to spin your wheels and be turning your account. That's the worst thing you can do is not have your money in the right place at the right time. The first scenario is, really quick, is that you sell your covered calls against the stocks that you have in your account. And the first scenario is the options. You get to keep the premium in all three scenarios. You keep the premium. They expire worthless. You get to keep it. You get to write the next series. You got to decide when that's going to be. The second scenario is you sell the covered calls against your account, but the stock rises. You can just let them call it away, and they have to give you the $12 strike price. The example that we're giving for all three examples is the October 30, 2020. The strike price is at $12 per share or per contract. One contract is 100 shares. The third scenario, the not so good one, that's still okay, but it could result in churning your account and ties up your account and you can't do anything else with it. So you sell the covered calls and the stock goes way up. Now you're faced with a prospect of buying to close the option out, but you're going to lose money now. Okay, if you wrote the call and it's out of the money and the stock is below the strike price, that's okay, but once it goes into the money and they're going to call it away from you at 12, let's say the stock goes to 15 as our example. Okay, that's $3 a share over to $12 a share. So you can buy it back, and you're probably going to pay $4, possibly maybe even $5 per contract. So now for 300 shares that we have in our account, that'd be $1,500 you got to pay. You could do that, but you have to go out to the January 2021 and underwrite the 13s and hope you can get 4.5, 5, and hope you can get the money. So you're breaking even with that trade, and the building is on fire and the flagpole's on fire. You're just getting a little from the flagpole. And I've done that before, and I've gotten away with it a couple times, but it's not a good strategy. It's not a good scenario to have. You want the scenario number one or scenario number two, where you write the covered calls that expire worthless, or you just go ahead and you're willing to let the stock go. And our examples for today, and the first video today and video number 3 coming up, we want to keep our 300 shares. We're going to add to the position, and we'll explain why in the next video. So we use Yahoo Finance, and you can see that they actually do a decent job. Taking a look at the headline here, we just now turn it on at 10 o'clock a.m. Pacific Standard Time. The Dow's down 195 points. You scroll over here. This is what we look at first, crude oil, and you can see it started out down, up a little bit, now it's down again. It's off 1.82%. So before even turning this on, I know Oxy stock's going to be down. A couple headlines that make you think. Stocks will do better if Trump wins the election. New data says Biden keeps pole position versus Trump after debate. That's probably true. I haven't had a chance to do anything with that yet. So let's forget that for now. Go back over here, my watch list. And we got a lot of stocks that we keep track of. And here's Oxy. It's down 1.43%. It's not that bad. So it's at $10.02 as of filming time today. And here's what we do. We look at the chart, follow the mouse. Okay. It's 52-week range, $9, but it was $47.58 at least within the last one time in the last 52 weeks. Dividends, 0.5%. We already got the dividend October 15th. Ex-dividend date's September 14th. It's always like 30, 31 days before they give the dividend. Near fair market value. Bearish pattern detected. That's okay. But if you look here at the 6-month mark, okay, on May the 19th, the very day we opened the account, right here, Occidental Petroleum was at $14.37. So you can, when we go over the account, you'll see that we picked up some shares, and there was a spike from May 29th, June 4th, but the spike peak from June 4th at 15.55 all the way up to $24.40 from June 8th. That's 4 trading days. That's pretty darn good, and I was so happy. I almost wrote the covered calls in, but I didn't. So we wrote the calls September 17th, okay, and the stock was at 11.86. And why did I do this? It got down here from on September 14th. Its intraday low that day was $9.23, and I thought we're going to test that low. I decided I got 300 shares. I'm going to write 3 contracts, and I got $1.01 a piece. They put the $300 and some in their account right away. There was like a $2 or $3 commission fee, which is dirt cheap compared to what it was in the 70s and 80s and 90s when I was doing this before. They'd be like between $10 to $25, $30 a crack. But these online brokerages, they've really got the cost down pretty good. So it went from $9.23 intraday trading all the way up to $11.86. And that's why I decided to take a chance on the covered calls. 7 weeks. I wrote the October 30, 2020. And it meandered back and forth. And I thought, I need to get out of this position because I don't want them to call my shares away from me. And it got up to $11 some odd cents, and I kept twice I tried to get out of the position by buying to close the position at 15 cents per contract. And I didn't get it because my number didn't come up. But this one day here when it went from $10.61 in 2 days, it was back down to $9.82. I woke up the next morning and I got it. Like I had it 12 cents. I had to spend almost $40 to close the position. My net profit was $263.01, and that's critical to have that. May 19th, the $2,000, my $1,200, my wife's $800 to open the account. The very next day, we bought the first 100 round lot shares of Oxy at $14.93. Go up and up and up and up. Trade details. Bought the second batch of 100 shares of Oxy at $13.50. And then on the 31st of August, the third set of shares, Occidental Petroleum, 100 shares at $12.75. So my cost basis, my dollar cost average is $13.72. Go up here. I sold to open on the 17th of September. Sell to open Oxy. We wrote the 12 strike covered calls, and they were the strike price date. The expiration is the 30th of October, which is now just a few days away. 3 contracts worth 300 shares. Got $1 a piece, $1.01 for them. I was going to put in the $1.15 and I would have got it because it spiked up like I told you. But then the $2 fee, so the $301 got put right in our account. So monkey back and forth. The trade details, we bought to close on the 15th of October, which is like 8 or 9 days ago, at 12 cents. And there was a $2 fee again. We had to spend $38, but our net profit, $263.01. And that doesn't sound like a whole lot, but you know what? Have a successful stock option trade after being out of the market for a decade and a half, pretty darn good. Just want to touch really quick about the warrants that I didn't know about. For every 8 shares of Occidental Petroleum you have, the company gives you for free. You don't have to do anything. They give it to you for free. For every 8 shares, you get 1 warrant. Well, so now we have 12 warrants, and that's the right to buy the stock. And it's a 7-year warrant. It's good until August 4th, 2027. And anytime the stock goes over $22 a share, you can buy them with this warrant and then resell the shares on the open market. What that means is if the stock is at 100, we can buy it for 22 and immediately put in the sell order and get it on the open market limit order for 100. That's a $78 gain if it gets to the 100. For Occidental Petroleum to give their shareholders these warrants, which have a nominal cash value, it was much higher than what it is now. When they first issued warrants, it was almost $4 per warrant. But long story short, for them to do these warrants, that exudes extreme confidence, and I'm really liking it more and more. I just think that this is a winner, and I'm going to close this account now because I don't need to show anything else in here. I'm going to log out, and I got to black some things out, and so there you have it. So go back to summary. We'll see what it's doing right now. It's at $9.99. It's down 1.77% for the day. That's not critical. But like I said, what we do, the second thing we look at, okay, oil is trending down. You can see that with the arrow up here. It's Occidental Petroleum, British Petroleum, Chevron, ExxonMobil. They're all highly correlated, linked to crude oil prices. You have to understand when you're investing in a company, you got to know what the company does. So I hope this made it self-explanatory. Oh, and I want to touch a couple of other things before I close this out. when you go to the maximum chart, this is when I had it. Matter of fact, my cost is lower than this. They had a stock split back in here in this time. My cost back in the day was like $3.80 a share, and they kept increasing the dividend. It was paying 12% back in these days. And next thing you know, I was getting 5 shares every 3 quarters. Next thing you know, it was 15, and it was 40. I mean, it snowballs when you get this thing moving. And they used to tease me how this was a dead dog and a dead in the water company, but it took off, and you can see here. I mean, this thing can go. Look, it was at March 1st of 2011. It was $103.33, and it's going to happen again. It's going to get back up there because they have the assets. They just got to get their costs down. They got to get this Anadarko oil, the mines they got at the Permian Basin in Texas. They got to get them more efficient, and they'll bring their people in who's much more cost efficient than what their people are, and this is going to be a great thing. So I hope you understood this, and I'm going to close this part of the video out. Our strategy for now, the near short term, intermediate term, and long term is right now we're doing nothing. Okay, we got an election in less than 10 days. I'm going to see how that goes. We still don't know who's going to win. I'll try to keep politics out of my financial videos. If people are sick of the politics anyway, if you love politics, I got 40 other videos you can binge watch and leave some comments. Just don't curse me. But we want to see which direction the company's going to go in because of monetary policy and things of that nature is all affected of who takes power in the election on November 3rd. In the intermediate term, we're looking at underwriting some naked puts. And what that means is we're going to sell to open the position, and we're going to, so for example, we're going to do the January 2021 12 puts, and they're probably around 4.5. We're going to keep that premium. We're going to do 5 contracts, so that's $2,000 is going to go right into our account. And if the stock does not rise above $12 a share at that time, they're going to put the stock to us. But we want the stock, we want it, so it's okay. And then we're going to add to our position that will then give us a total of 800 shares. That's what we want. And then we're really going to start pounding the cover calls later in the year. Okay, long-term strategy, we were planning on keeping this company. We were planning on keeping our 300 shares because we know this thing is going to go up. A little leery of writing any covered calls now because it's so close to its low already. And it's been bouncing off to 923, bouncing off to 950, bouncing off to $9.80. It keeps doing pretty well. But as you saw previously in the other clip when I was showing you the information part, it went from $10.19 all the way to $11.86 in one day. That's $1.75, and that's when I wrote the covered calls. I knew that my chances were in my favor. The October 30th, 2020, with 7 weeks to go, and if I could just dance it and it goes back and forth, and that's exactly what happened. In a way, I got lucky. But I always wanted to close the position. I know I'm going to get a text message or an email saying, well, you could have let this one run out the clock. That's true, but look what happened when we first bought the company. It went from 14 all the way to 23, 9 points in a week. And I remember telling to my wife, hey, look, we're doing good, we're doing good. And I almost read the covered calls in, but something told me, just wait a little bit. We just opened up the account. We want to be a little patient. So it's not a missed opportunity. Don't think that way. Just think that we're planning and plotting and we're taking, it's like a football game, 5 yards at a time, 5 yards here, 5 yards there, and then we're going to score a touchdown. Okay. When you throw the big bombs don't always work, and the other team could pick it off and you lost your chance. So think of it that way. So I want to close this video. I hope it made it self-explanatory. Stay within your means, and this is your chance to do something for yourself and fund your retirement and make some money in the stock market. I hope you understood the video. I hope it made it plain for you, and especially the parts where I'm filming in my room and I'm doing the screenshots. Hope that's all self-explanatory. You can do it yourself. Next video will have even more information. We're going to be building as we're going along, and I'll be able to talk a little bit more about the strategies and things of that nature. So, and the disclaimer is on every one of my videos at the very top of the bar, and that's just how I am. I'm so cautious. So I hope you understood. Thank you for watching. Please like, share, subscribe, and always a great day to be an American. Thank you.